Let's put the spotlight then on the domestic travel sector and talk about how domestic tourism is likely to get a boost by the inbound travel due to India's presidency of G20. And you've got the meeting in Srinagar as part of a series of meetings in India. What exactly does this mean? What are the other travel trends? We've got Kavinder Singh, MD and CEO at Mahindra Holidays and Resorts, to put that into perspective. Thank you so much for taking time out and joining in. So just let's get in a take from you, because it's been a strong recovery for the hospitality sector as a whole, and now this G20 presidency boost. How are you looking at really demand, occupancy growth, etc., scaling up?
You're right. Actually, the demand is looking better than ever. If I were to look at the occupancies in the month of April, we did about 89%. May is likely to cross 90%. The quarter is looking very good and looks like we will cross 90%. And this is to be seen along with the fact that we added about 1,200 rooms and added up the cumulative inventory went up to about 4,940. So despite adding 1,200 rooms, we are seeing a very strong momentum in the occupancy, and we are likely to close this quarter at about 90% plus occupancy.
90% plus occupancy, that sounds quite stellar. And you talked about the rooms that you've added so far, but what's the plan with respect to FY24? What are the new properties that you're coming up with?
So we have very robust plans on FY24. At this moment of time, there are two big projects that are going on. We have one in Kandaghat area, which is Shimla area, where we have invested about 200 crores. We should be done by the end of this year. So we are adding about 180 rooms there. This will make it a 250-room resort. We are adding another greenfield project into our portfolio. The ground broke in April of 2023. And we are looking to add about 230 rooms at an investment of about 250 crores. So that's the other investment that's going on. In addition, we have our Goa resort where we are adding about 40 rooms. So that will be another 50 crores. Our Puducherry resort will be expanded investment of 70 crores. We are adding another greenfield new resort that we will break ground in the next few months in Himachal area. That will be another 140 crores. So we have a lot of projects that are going on, a lot of projects that will be started. So we are looking at clearly an investment over the next 3 to 4 years of about 1,500 to 2,000 crores.
Kavinder, which all of us consumers and all those who are watching the interview, there's only one thing that they want to know, whether ARRs will come down or not, because even domestic holidays are getting so expensive now.
One thing in our business, the good part is that we are a membership business. Our members are having a great time. We have 2.8 lakh member families, roughly 1 million people who travel through our resorts. They don't have to pay for the rooms because they got the membership whenever they got it. And we keep adding resorts. We have 100 plus resorts now. So my invitation to your viewers would be to buy the membership, because that's what really, in a way, ensures that you don't have to worry about the rising room rates. But if your question has to be answered that will ARRs come down, very unlikely, because the supply is a constraint and leisure is an underserved market.
Sure, point taken, but I understand that you've been looking at expanding the presence when it comes to the international market as well, doing some more partnerships, etc. Could you talk to us about what's the plan there?
So in the international market, we have expanded our footprint in a very big way. As you know, in the last quarter, we added destinations like Cambodia, Vietnam, Nepal, and also Maldives, Abu Dhabi. So we have really expanded our footprint in Middle East and Southeast Asia. We are present in Singapore. We are present in Malaysia as well as Bali. And these are, arrangements that we do. Of course, in Dubai, we run a full-fledged resort. In Bangkok, also, we own a property. And our aim is also to keep looking at opportunities in Middle East and Southeast Asia. That's where we see Indians going. But you must know that we have a presence in Scandinavian Europe through our fully owned subsidiary Holiday Club Resorts, where we have 25 resorts in Finland, about 6 in Grand Canaries, and about 2 in Sweden.
So, Kavinder, you talked about how your business model is slightly different, and more than occupancy, etc. What's also a cash generating, way for you is getting the members, right? So, how's been the member addition rate? What is the sustainable quarterly run rate that we should expect for the coming years?
So, in the Q4, we hit 5,000 mark, and this has happened after a few quarters because of the pandemic-related issues. So the good news for us is that we are tracking very well, not only on the member additions, but also on the value. If you look at Q4, we had 70% growth in value in terms of member additions, value. So two things that you need to watch out for, not only the member additions, but also the growth in the member addition value, which is what we are trying to do. And also the resort income. You may have noticed that for the full year, we have ended growing our resort income by about 68% and at about 323 crores. So the business model actually is very robust. You add members, your resorts grow because you get capital. And when your resorts grow, your resort income grows, your profits grow, your margins have grown better than the pre-pandemic years. And as a result of which, the fact is that you also are able to get higher quality members because you are building great quality resorts. And that leads to the value growth in memberships as well. Our deferred revenue today stands at about 5,300 crores, which is a significant number because, this is really a delayed profit if you were to look at it.
Tell me, what's the trend like? Because across the board and across consumer categories, what one is seeing is that luxury is the one which is giving you higher returns and a bigger demand as opposed to the affordable segment. Does that phenomena hold true even in your industry, wherein it's luxury travel which is seeing a higher demand as opposed to, affordable?
Yeah, I think this is a very, very valid point. We are seeing very similar trends in our resorts. Even though people have paid for the membership, we are noticing that they're spending at the resort much more than what they would spend prior to the pandemic. And that's a change that we have seen. And that is what we have seen in terms of our resort revenues, which went up to 323 crores, which was, almost a 70% jump in our resort revenues. So we are seeing people spending money on experiences, great quality food, and they are willing to splurge because they feel that they have come to bond with the family. They have come to explore the place. Of course, they feel great sense of affiliation with a club like Club Mahindra. So this helps actually us to be able to take advantage of this trend that you just alluded to. That yes, people are wanting to spend money, and that too on upmarket products. You would understand that our product is an aspirational product, and people who would like to be present in our resorts would also want to be seen there. So we get a lot of Instagram posts where people are saying checked into Club Mahindra Resort. So we are noticing this trend as well.
And so what is the outlook then in terms of trends that you're seeing when it comes to travel? Do you think that people are going more for experiences, greener travel, more sustainable, anything else that you've observed?
We are seeing all of what you said. We are seeing people wanting to drive rather than fly, even though the airlines are running full, we know that. We are also seeing people wanting to understand what we are doing on sustainability. And I will take a moment to share with you that we have won an award as Pioneer in Hospitality Sector. We have 11 resorts which are Platinum Green certified by CII IGBC. So we do our bit on the sustainability side, and that's something that people are valuing. And we are also wanting to share here with you that the experiences people are now looking for more outdoors. So we have invested in a company called Rocksport. They are doing a lot of outdoor adventure activities, soft adventure activities for families. People are participating in that. They want to come out of the room. They don't want to be indoors. So these are some trends that we are watching in our resorts. Multi-generation travel is another trend. People travel with families across generations, friends, larger groups.
Before just I let you go, wanted to understand from you with respect to the addition that's happening in the members. Is it fair to say that the metro and the urban area has been penetrated enough and now the growth will come from tier 2, tier 3 cities? And also, does that mean you'll have to increase your expenditure on advertising, distribution channels, etc.?
You know what? This is a very, very valid question given the stage we are in. Actually, we are just at the tip of the iceberg. We haven't even scratched the surface. You just look at some numbers. There are 16 million consumers, families, actually households who could afford our product. And this number is going to become 30 million from various reports by 2030. We have just 300,000 members or 280,000 members. So we haven't even scratched the surface. There is no saturation in urban metro markets. This is for the aspirational class, and wherever there is aspirational class, we will get our members. So I see this as these are significant tailwinds that we see in terms of people wanting to travel, they wanting to become a member of a club, they want to bond with their families and friends, and this product allows you to do that. And therefore, I don't think we are worried about increasing our ad spends to go deeper into the markets. We will be present in urban, metros, and tier 2, tier 3 towns, and we are seeing traction across the markets.
Really appreciate you joining us on the show today and making time. But